Welcome back to another video, and in today's video I do want to give you guys usual weekly market breakdown. We're going to take a look at the dollar index, gold, Nasdaq, Euro USD, as well as US 30 from a technical and a fundamental perspective. Now if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please make sure to hit that thumbs up for the YouTube algorithm there as well. Now I hope you guys are still having a beautiful weekend. Other than that, let's jump straight into the data. Now in order to make future forecasts or future decisions, it's very important to understand what had happened historically. So it's called a regression analysis, where you use historical information to make future decisions. And we're going to look at some fundamental data that came through last week. We can firstly see the CPI came through very hot last week, which ultimately then sent the stock market to the downside. We had some fake outs. The market was just crazy on Friday, but because of that, we can expect the increase in the dollar index in the long term, and as a result of that, negatively impact the stock market there as well. The core retail sales came through, and the retail sales came through there as well. We also had the Premier University of Mexican consumer sentiment pull through positive. Retail sales came through at a negative or 0.01, and we also had the core retail sales came through at 0.1 there as well. Taking this into consideration, we're going to use that information and forecast exactly which way we're going. The bias on the dollar index remains bullish because higher inflation data means a more aggressive interest rate hike there as well. We start here with this article from CNBC. It says here that Dow Jones closed 400 points lower to the end midweek of trading. It says here the stock market slumped on Friday, capping off a volatile week of trading a day after posting a historical turnaround rally as investors digested inflation expectation. I'm really not sure what these people are expecting nowadays, because inflation is not just going to turn around. The Fed probably have to hike interest rates more times than they would like to, or higher than what they would anticipate, in order for investors to start seeing a dip in the stock market. We can see here it says the Dow Jones Industrial fell at a 1.3.4% to the end of the day. The S&P 500 was down but the index was still up 1.15%. The S&P 500 was down 2.37%, and everyone's favorite indice, the Nasdaq, was down 3.08% at the end of Friday. Also says here Tesla and Lucid Motors declined 7.5% and 8.61% respectively. Both the S&P 500 and the Nasdaq ended the week lower, falling 1.55 and 3.11 respectively for the week there as well. Says your stocks fell to season lows after consumer survey from university shows inflation expectations were increasing, a sentiment that Federal Reserve is likely to watch very closely. The tech-heavy Nasdaq led declines as growth companies are more sensitive to interest rate hikes. And I've said this many times. If you've been on the channel for a long time, I've said this so many times before, that the stock market doesn't sit well with interest rates, and because the inflation is directly correlated with interest rates, when the inflation is high, investors expect the Feds to be more aggressive with the interest rate hikes, and as a result of that, the stock market tend to sell off there as well. Next up, we do have the retail sales that pull through. We can see over here that the US retail sales were left unchanged as consumers saw resilience. Now it says here consumers are staying in power, maybe wanting, but it's showing few signs of breaking, said Tim, a senior economist at Wells Fargo in Charlotte, North Carolina. Overall spending will continue to moderate as inflation persists and tighter monetary policy begins to weigh more meaningful on consumption. The unchanged reading in retail sales last month followed an upwardly revised 0.4% in August. Sales of August were previously reported to have gained 0.3%. Retail sales were up 8.2% on year over year. And economists polled by Reuters had forecast sales to climb at 0.2% there as well. Retail sales are mostly goods and are not adjusted for inflation. Soaring costs for rents and healthcare are squeezing budgets for Americans, leading them to reduce spending on goods. The situation has been compounded by higher borrowing costs, which is what we saw with the interest rate hike continuously to be increased. It says here that the survey that was done further October, but inflation expectations deteriorated a bit as average national gasoline prices moved back up towards the $4 gallon per mark. Now it says here the Fed has raised its policy rate from nearly the zero in March to a current range of 3 to 3.25% to get down inflation, a fourth straight 0.75 basis point hike, and more is obviously expected. So we can expect this to continue, that increase, and as a result of that, we can definitely expect the dollar index over here to also continue the bullish momentum, as we can see. Now we're going to jump straight into the daily from a technical perspective. Now on the daily time frame, we can obviously see that the dollar index, firstly on Friday, the market had broken above this massive impulse. We broke to the upside, the market pulled back, came to test its previous level of support as resistance, making way for that continuation to the upside. Now we have that massive impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, you can see we're at a 0.382 pullback that we can expect the market to go and hit this level going into next week there, and then from there we're going to monitor price action once again. So that is what's going to happen next week. Whether you like it or not, the dollar is going to increase in value, and the market's going to create an equal high there as well. Now because the dollar index is negatively correlated with gold, we can definitely expect gold also now to continue lower, and then from there I'll give you guys another update. Gold is currently trading in very bearish territory. I was expecting a pullback, but from where we are now, I expect the market to open up and then continue lower, go and test that previous low there as well. Next up, we do have the Nasdaq 100. Now the Nasdaq, we have to go back on the weekly time frame over here, and we can see this market had tested this previous level of support. We can expect the market now to go and fill in that wick, because normally when you get a candle like this with a long wick, you can always expect the next candle to go and fill in that wick. Also, if you look at this level over here that acted as a level of support over here, the market broke below support, came to test it as resistance, gave retail traders some hope there of a continuation. We can definitely expect the Nasdaq also to continue lower there on for next week, and then from there I'll give you guys another update as the price action needs to be monitored from that level there as well. Euro USD, and as we can see, Euro USD printed similar price action, and you've probably, if you watched that update I made last week, I said we can expect the market to continue higher, and from where we could definitely expect Euro USD to continue lower, to go and test that previous level of support here as well. So boom, that is, sorry about that, that is definitely what that is what's going to happen as we step into next week there as well. Next up, we've got the Dow Jones. Now the Dow Jones had obviously printed this equal high on the daily time frame. The market is now faced with new structure over here. Now the market had printed a W formation. After a W formation, you expect a pullback to the neckline before that continuation to the upside, but unfortunately it's not going to work this time. We definitely expect the Dow Jones to continue lower. Could be the start of a consolidation phase there as well. Going into next week, this is exactly what you can expect, as we expect the dollar index to continue higher there as well. Now it's very important to understand that you have to be reactive and not predictive, and learn to adapt to the ever-changing market environment there as well. And then lastly, I want to say thank you for all of the people who has been supporting the YouTube channel there as well. I really appreciate the support. I want to say thank you so much for your time, and as always, cheers for ears, my good friends.